Good morning, everyone, and thank you for joining us. We know that payroll and pensions can be a minefield, particularly the part that involves dealing with PCSE. So we hope this morning's session will give an update on where we are now with payroll and pensions and some tips and hints to help you avoid some of the pitfalls. My name's Kay and I head up the healthcare team here at Duncan and Topless. I work with a fantastic and friendly team with years of experience between us. And I'm joined today by Head of Payroll Damon Tunnicliffe and Associate Director Annette Stewart. As we go through the presentations, please pop any questions you have in the Q&A section and we'll cover these at the end of each short session. So without further ado, I will pass over to Damon. Thank you, Damon.
Thank you, Kate. Good morning, everybody. Today I'm going to give an NHS pension and payroll update. It's mid-February already, so the end of the financial year is fast approaching, which then means ensuring all SD55 pension year ends have been completed by the 31st of May. Just a reminder though, that is a Saturday, so looking to be aimed for the deadline of Friday the 30th. If we process the payroll, we'll ensure those are uploaded as close to the payroll year end in order to give you ample time to get those updated if you input the figures. It also gives enough time if there are any queries that arise, such as employees that have been on maternity in the year, which need slightly more detail than the reports we've deemed pay. With all the changes that have happened over recent years, it's quite refreshing that there doesn't seem that many planned changes from last year. A useful tip for those that do input the figures themselves is that NHS pensions have once again confirmed on the completion of the annual SD55s is that there is no requirement to include mid-year contribution rate changes. It's just the final contribution tier that the employee is on at the end of the year. So effectively the tier from the March 2025 payroll. If you do administer that, you will know how much time that will save. There are some proposed changes to scheme rules from April 2025 with the Department of Health and Social Care, but nothing too fundamental. With them not being agreed, then I won't comment on them now, but if there are any further updates from April 2025, then we'll send this out in the article as we know more. Currently is that the employer contributions will remain the same as they were in the 24-25 tax year. The total of this is 23.78%. That includes the 0.08% admin levy. Cost of practices of this figure remains at 14.38%, with the remaining 9.4% made up by a central payment from NHS England. Employee contributions tiers also remain the same as they were in 2024-25, which I have on screen now for you. Just something to consider with the rise of national minimum wage, which I'll cover shortly, or an incremental pay rise, is how this could affect an employee's pension tier. Just moving now on to salary GPs and in preparation ready for the end of the tax year. Again, if we process your payroll, we're collating information from what we hold to ensure they are on the correct tier. However, please do have the conversation with your salary GPs to ensure they have assessed all of their pensionable earnings, as ultimately it is their responsibility to ensure they are on the correct tier. I've seen it before where salary GPs are completing their Type 2 certificates at this time of year relating to the previous financial year, and they've realised they've been on the wrong tier. Unfortunately, if it has been on a lower tier, then there are adjustments to be made, which can lead to awkward conversations and additional pension deducted in order for the correct amount to be taken. I did see recently a client who I thought had a good onboarding email to their new salary GP, with a table as displayed on the screen, asking them the question of the tier from potential other income so that they could confirm. Possibly a tip that others want to do as well. I just wanted to conclude the preparing for year-end section with the P60s. Just a reminder that the figure shown on the P60 is taxable pay and not salary or pensionable pay. We often see salary GPs query that figure, but it's the salary minus the pension that equals the taxable pay. We can help to provide any summaries, and in particular for the salary GPs, which gives them their pensionable pay for their Type 2 certificate. Kay is going to discuss the Type 2 certificates in more detail later on. Moving on to the new tax year and getting prepared for the 25-26 tax year. Unless there are any major legislation in the spring budget, this is what we know so far that is going to be impacting your employees and the practice. Pay-as-you-earn thresholds, rates and codes remain at 12,570 for personal allowance. The 40% band remains from £37,701, but with the full personal allowance, this really is from £50,271 as a salary. This is further increased with pension, so a typical salary of around £56,000 would be a higher rate tax year. The big change in legislation this year, though, is regarding employers' national insurance. Just before I get to that, I'll mention the employee national insurance as that threshold of £1,048 per month before employees pay national insurance at 8% isn't changing. So now for the big change. The threshold before employers pay national insurance is changing. Last year, this used to be £9,100 or £758 per month. Any earnings over this, the employer has to pay currently 13.8% on this. For the 25-26 tax year, this threshold decreases to £5,000 per year, or equivalent of £417 per month. Not only that, but the employer national insurance rate increases to 15% as well. So what does that really mean in reality and cost? Based on the figures from the 24-25 year, it would mean that per employee, it would be an extra roughly £615 cost to the practice. Depending on how many employees you have as a practice or organisation, this can become quite a sizable figure. If we process your payroll, please do get in touch and we can run a report based on the year-to-date figures for this year to give you a better estimate of that cost. Especially at this time of year when you're looking at budgets and potential pay increases, is all going to have a major impact on this now. So staying on this theme and looking at national minimum wage. From the 1st of April, the national living wage for 21 years and over will increase by 6.7% to £12.21. It's worth noting that percentage increase if you're looking at pay increases with the banding between employees that are close to the national minimum wage. The percentage increase for 18 to 20-year-olds increases by 16.3%, where those employees now will be paid at least £10 per hour. And for 16 to 17-year-olds and apprentices, they will now be paid £7.55, which is a huge increase of 18%. I just wanted to touch on the student loan and postgraduate loan thresholds. So for those employees with a student plan type 1, they would have to earn over £2,172.08 per month. And those employees with a student plan type 2, there's that threshold is £2,372.50. Now, student loan is deducted at 9%, and that is deducted at point of payment. So if you have an employee that fluctuates above those thresholds, then they will be deducted student loan, but then for any reason they fall back below those thresholds, then they won't be deducted student loan. So it's just something to bear in mind if employees are coming to you and saying, I've got a student loan, but nothing has been deducted or deducted some months or others. And the postgraduate loan remains at £21,000 per year. So again, same basis, that's £1,750 per month. And that is deducted at a lower rate of 6%. Just looking at some of the statutory rates, and just one that, so SSP increases to £118.75. That is up from £116.75. So if you've got a 5-day worker, there's £23.75. All of the other statutory rates have had a slight increase based on what they were last year. So just my final part, I just want to discuss payroll in benefits, something that's not going to affect all of you, but just something that I need to go through with you this morning. So from April 2026, this is going to be a mandatory requirement to process through payroll. So currently at the moment, for those that are preparing P11Ds for employees or for mainly salary GPs, then that will become mandatory from April 2026, so won't be going through on a P11D. However, you are able to register. You are registered now, and you can do that through your online gateway, or also we can do that as if we act as your agent, and we're encouraging clients to sign up for that so that they are ready for the change for April 2025, that before it becomes mandatory in April 2026, then you're all signed up and ready. So again, further, if you have those P11Ds that you're currently completing or outsourcing, then please do talk to myself or one of the team. So that's it from me. Hopefully not too much this year in terms of payroll and pension legislation as what we know now. And now I'm going to pass over to my colleague Annette, unless there's any questions.
Thank you very much, Damon. No, there's no questions yet. So just a reminder, if anybody does have any questions, please do feel free to pop those in the Q&A or ask any of us. If you've got our personal emails, just pop any questions across to us if you want to send them directly. Right, I'm just going to screen share some slides for Annette. Okay, so hopefully everybody can see that.
Good morning, everybody. I'm your stand-in, so my colleague Danielle was meant to be doing this session for you today, but unfortunately she's unwell, so I will do my best for you. So I'm talking to you today about PCSE, and my first point is in relation to the joiner and leaver forms. So the joiner and leaver forms ensure the correct pension contributions are deducted from practice contractual statements for GPs, salaried GPs and non-GP partners. If a member is not part of the NHS pension scheme, then the joiner or leaver form is not required. Please ensure that the appropriate person at the practice has the joiner and leaver form or joiner and leaver role enabled with PCSE so that they are able to access the forms. Unfortunately, as accountants, we don't have access to this role but we can still support you through the process if needed. Teams meetings with screen sharing works wonders. Okay, my slides are just that's better. GP, please ensure GPs are aware of their own responsibilities in relation to the joining and leaving process. They are the first step of the process, and it is their responsibility to update their employments. Consider ICB approval for principal GPs. So when a new principal GP is joining the practice, the practice is advised to contact the ICB as soon as possible for contract variation. Principal GPs need ICB approval before the joiner form can be completed. So this is an extra step in the process. A salaried GP only needs practice approval. PCSE have extended how far the form can be backdated. So it is now to the beginning of the previous financial year. So currently the form can be amended, or an amendment can be made from the 1st of April 2023. However, from the 1st of April 2025, this will move forward to the 1st of April 2024. So now is a very good time to review your statements and get any joiner and leaver forms updated where possible. If you're out of time or new starter details aren't pulling through onto the form, you will need to raise an inquiry with PCSE, and this can be escalated to the complaints team if not actioned in a timely manner. Complications arise when a salaried GP becomes a partner, and the estimate of pensionable profits and pay is a good way to see how PCSE are deeming that person. So if they're a salaried GP, they'll be in the middle part of the form. If they're a partner, they'll be at the top part of the form. And if PCSE or something's gone wrong in the process, then that's an indication that something needs to be, an action needs to be taken. SD numbers are a common problem with getting GPs onto the performers list and also getting pensions deducted. The PCSE can't complete the form without them. GPs will be able to find their SD number on any correspondence from NHS pensions. However, in the absence of that, they can email nhsbsa.pensionsmember@nhsbsa.nhs.uk. Then either the GP or the practice can update PCSE with the SD number, and their GP record will be updated with PCSE. Within 2 hours of PCSE updating the record, the change will pull through onto the joiner form. The process does seem to take longer for newly qualified GPs who don't pull through onto the performance list quite so quickly, so PCSE may need a nudge. Practices can review the GPs that are on the performers list by search NHS performers list, and that will bring up the practice, or you can search by practice and edit and check and look to action any GPs that are not on your list or are on your list that are no longer working with the practice. Okay, you can move on, thank you. So now practices are preparing the estimate of pensionable profits and pay. So the next one we're doing is the 25-26 one. It's an annual form as a minimum, but it's vital to check and consider throughout the year for any changes, especially where pay rises are applied after the 1st of April. Once the form has been completed, first check for PCSE approval. Don't assume that the process, so a form would be rejected if incorrect tiers are selected. Even when the form has been approved by PCSE, don't assume that the process is complete and will be actioned correctly. Check that the correct deductions are being taken via the contractual statement. Make use of your accounting software to assist with this. For example, if you're using Xero and a monthly template for your GMS statement, update the template when the estimate form is completed to input the contributions that should be deducted for each GP in the scheme. This will save you time when entering the statement onto zero, but can be used as a quick check that PCSE are deducting the correct amount of superannuation. It's also a good flag for GPs who are missing and any incorrect amounts. Next one, please, Kay. Where you have problems with your performance list, your joiners and leavers forms, salaried GPs to GP partners, your first port of call is to do an inquiry with PCSE. And should that inquiry not be dealt with in a timely manner, then please email pcsc.complaints@nhs.net. And please watch out for end of year adjustments. So practices where we are completing the superannuation certificates for GPs, we will contact the practice manager detailing the balances that are due to be collected or repaid for each GP. Check that these adjustments filter through onto the statement at the appropriate amount, but keep checking monthly, as there's no guarantee when PCSE will make these deductions. And PCSE in the past have taken these adjustments twice, so this can be a significant impact on practice cash flow. Does anybody have any questions?
We do have some questions, Annette. We've got, is there an opt-out form on PCSE Online for GPs to complete? So yes, there is. If you log into PCSE Online and select the GP Pensions tab, there's an opt-out option on the dashboard that you can click onto for that. We also have another question. I have approved my new salaried GPs on PCSE when they have done their bit, but then I cannot find them when I try to complete a joiner form to add their session, pay details, etc. This happens every time. What more can I do?
I think this is where you have to go to the contact us for PCSE. So you can check they're on the performance list, but I think the fact that you've done all your bits should mean that they are there. So it's an inquiry to PCSE, and hopefully they will get back to you.
That is a problem that we do frequently see for practices, isn't it? That they have done their bit and then it just seems to get stuck.
Yeah.
No more questions on that bit, so I shall move on to my section now then. Right, so thank you very much for that, Annette. So I'm going to cover the Type 2 certificate process, including issues that we've seen and hopefully how you can avoid these. So firstly, I'm just going to cover what a Type 2 GP is, and I know most of you on this call are looking at it from a practice perspective for your salaried GPs, but they also need to be considering what other income they need to be popping on their forms, and their actions obviously have a direct impact on your finances at the end of the day. So a salaried GP employed by a GP practice or an APMS contractor is a Type 2 GP, as is a long-term fee-based or self-employed GP who works for a GP practice or APMS contractor. A GP who works solely on a self-employed basis for an out-of-hours provider that's an NHS pension scheme employing authority, or on a self-employed basis for an NHS trust or foundation trust that provides out-of-hours services. What needs declaring and how can practices help? So with the best will in the world, you and the salaried GP can start the year estimating the pension tier, but anything can happen as the year progresses. So I'm going to cover the importance of the salaried GP understanding what is and what isn't pensionable and estimating as well as possible what they may earn at the start of the year in a moment. So all Type 2 medical practitioners must complete and submit their form to PCSE. So the 23-24 one is due with PCSE by the end of this month. And the forms have to be submitted via the Contact Us page this year. So that is a step back from last year when it could be completed on PCSE Online. It is the salaried GP's responsibility to complete this form, not the practices. However, as we have seen on various occasions, the submission impacts practice finances, and so it is important that the figures used are correct. And we therefore recommend that practices do provide their salaried GPs with the necessary practice figures in order to avoid any cash flow issues further down the line for the practice. And as Damon's already said, he can provide that for anybody we do act for in respect of payroll. We recommend that practices give their salaried GPs their pensionable pay figure and employee contributions figure for each financial year. And that's because we have seen salaried GPs using their taxable pay figure where the pay slips don't show the pensionable pay figure. And Damon mentioned in his section that the P60 shows the taxable pay, and that's the gross taxable pay, the gross pay less the pensionable pay. So that is too low a number and can result in incorrect refunds. Also, we've seen them enter their gross pay, which may be the pensionable pay, but not always, because that can include bonuses or any expenses reimbursements, and that can result in a higher figure being taken from the practice. So this year, for the first time, the form also does include a third column, and that column's for the employee contributions that PCSE have deducted from the practice. Now, the salaried GP should be able to pick this up from PCSE online, and the form does state that the completion of that column isn't mandatory. However, it would be worth you passing the figure to them when they're completing the form if you can. Where deductions have been taken smoothly throughout the year, there shouldn't be too much of an issue. But what could be an issue, and what you both need to be careful of, is if there has been an issue like the ones that Annette's covered in her session, where there's been perhaps backdated contributions taken at a later date after the year end, you need to ensure that all of those are captured. So it's not just looking at what PCSE have deducted from the practice during the year if they're completing that column, it's looking at what's happened after the year end in respect of any deductions or adjustments relating to the 23-24 year. The purpose of the form is to ensure that each Type 2 practitioner has the correct overall tier applied for the year, and it enables them to calculate any shortfall or refund due to be calculated and dealt with. It also enables PCSE to ensure that the correct employer contributions have been collected from the practice. So it's a legal requirement for a Type 2 GP to pay the same tier rate on all of their GP pensionable posts, and they need to liaise with each organisation that they've worked for during the year that they're assessing to ensure that they paid the correct tiered contributions. And it may be that they had more than one Type 2 post during the year. They might have worked at 2 surgeries, and all of those need entering on the form, as well as if they had any Type 1 posts. So if they worked as a GP partner in any practices or moved from being salaried to a partner, that needs capturing as well. And also any locum income that's been pensioned via locum A and B forms, that needs including too. What doesn't need declaring, that certain employments don't need declaring because they can be treated as standalone officer posts. So, for example, employment income received as a GP registrar, or if they've been formally employed by an integrated care board under a contract of employment, then those don't need to be included because that is classed as an officer post in NHS pension scheme terms. In respect of this income, then it's the employer's responsibility for collecting the contributions and updating the employee scheme membership record. So what are the problem areas and why is it important for practices to monitor? One thing to mention firstly is, as I'm sure you all know, everybody is now on the 2015 scheme, so the tier is based on annualised pensionable income. So if, for example, you've got a salaried GP who was a registrar for part of the year and then joined as a salaried GP for the second part of the year, you take the pensionable salary from the salaried GP post and you gross that up to a full, if it had been a full year at that rate, and that then is used to calculate the tier that should be applied. One problem we often see is that if there is a shortfall or a refund, then the shortfalls are taken from the practice or the refunds are given to the practice, even if the salaried GP has left. So you could end up with a situation where a salaried GP has been with you, say, for a month, say April 23, could have left 30th of April 23. They'll only be submitting their form this month potentially. And if the tier has been set too low compared to what they ended up working for the rest of that year, then the additional pension is going to be taken from the practice. So it is essential that you do keep contact details for any salaried GPs who are leaving you in case you need to address any balances in the future. And the best thing you can do is really to have regular dialogue with a GP throughout the year where they're with you, to check if there are any changes outside of the practice income that would have an impact on their overall tier, so that if necessary, you can uplift it in the year. As Damon mentioned, it's much easier to do this in year and whilst the GP is still with you. And what a fantastic idea, Damon, someone's had to send that onboarding letter, including making them aware that there is a need to know what else is happening outside of the practice. You don't need details, but you need to know what impact it is going to have on that tier. It's also really important to monitor and compare the deductions that are being made by PCSE to the deductions on the payroll. So again, it's much easier to resolve issues in year rather than after the event. Being aware of any differences also allows you to account for any impending deductions or refunds due within your cash flow forecasts. Encouraging the salaried GPs to complete their Type 2 certificates as soon as the form is available and letting you know what their final tier rate would be really helpful for you as well, because that gives you the ability to check and see if there are going to be any adjustments that you may need to deal with. Without the conversations, the first thing you may see is the adjustment that PCSE would make on your monthly NHS statement. And then, as things have previously been, it's trying to unpick that and look at, okay, we've had an end of year adjustment. Is that purely because the deductions made by PCSE from the practice aren't what they should have been in line with the payroll? Or is it actually that part of that employee adjustment is an adjustment for the practice and part is due to a tier rate change, comparing the final tier rate assessable to what had been used for the employee's payroll? So as I say, what would be really useful would be to have those conversations with your salaried GPs now, and ask if they have any other Type 2 income that's likely to push them into a higher tier for this year. So you're in 24-25 now. If you come across any reasons why in those conversations it becomes apparent they should perhaps have been on a higher tier, you've got chance to make adjustments to the March 2025 payroll, and also got the chance to put in an updated figure on the PCSE form for declaring salaried GP income, so that they also make adjustments to the deductions made to the practice. So that could be something that would be really helpful to do now. Just a quick mention on how to deal with maternity, paternity, adoption or sick leave claims. So if a salaried GP received any of those things during the 23-24 year, any pay received is pensionable and the tiered rate remains the same as it would have based on their unreduced pay. So for example, if your tiered rate was set at 12.5% based on your normal pay, then they will pay 12.5% on any reduced maternity, paternity, adoption or sick pay. And they're going to need to enter the annual pay or income that they would have earned if they hadn't been on the approved maternity, paternity, adoption or sick leave. They're deemed to have earned at the same rate during the period of leave. And although the tiered rate will not change, they will only obviously have to pay the contributions on the pay that they actually receive. You as a practice will continue to pay employer contributions on employer pay, the actual plus deemed pay, that is, the pay that they would have received if they hadn't have been on approved maternity, paternity, adoption or sick leave. A salaried GP might ask you for a copy of the maternity breakdown form that shows the employer contributions paid to PCSE during their approved leave as well. Annette mentioned in her session that one thing that salaried GPs need and can sometimes struggle to find, as do some new partners, is their SD number, and that should be on any correspondence from the NHS pension scheme. It's also available if they call NHS Pensions and get this directly. So Annette's mentioned the estimates form in her session. I've just popped a few more notes on this last slide around some issues we've seen with estimates forms for partners. But what I would say is for any dealings with PCSE, make sure you or the GPs or partners keep all case numbers safely and noting what was raised as well as dates. So we've put in quite a few complaints and have tried getting compensation for some of our clients. Haven't been successful so far. We've been asked for timelines and case numbers. We have sent these in for a number of clients, and unsurprisingly, so far they've been ignored. We are still chasing those up, but it is easier to keep a note as you go along. So if you need that later, you've got that timeline, you've got the case numbers, what was raised and what's happened since. So just a few examples of PCSE issues that we've seen and why it's important just to be aware of what they are deducting and what should be being deducted. So we've seen estimates forms where they've had to be uploaded on PCSE Contact Us because the GP partner hasn't been showing or has been shown as a salaried rather than a partner. PCSE have then corrected it so that they are showing as a partner, but entered an incorrect figure on the online version when they've input it. And so when they've got that GP set up and they've started taking deductions, the deductions have been incorrect. In this case, they were very, very low deductions. And it's important to monitor that. What is taken is what should be taken, because HMRC only allow tax relief for partners when the balances are actually paid. Now, we have been claiming tax relief in some cases and noting that if HMRC do look at it, the reason we have claimed tax relief on it is because it's been down to PCSE errors, and it feels so unfair that a partner should have to pay a lot more tax when the cash was there for PCSE to take, and it really isn't the practice or partnerships or the partner's fault that PCSE couldn't get their house in order. It's not fair, and it not only impacts the balancing tax payment in a year, but also the payments on account of tax for the following year. So it can be a real cash flow issue. Other issues we've seen include entering an estimate form online. PCSE have approved it, but then they haven't followed the process and taken the deductions. So after several contact us inquiries and phone calls, they did eventually process it and said that they really didn't know why the deductions still hadn't been taken. And once again, the backdated adjustments weren't quite what we were expecting. They weren't too far out, but they weren't the figures that they should have been. Also had an example of an estimates form being completed and submitted, approved by PCSE. They were taking the correct deductions, but then they wrote to the practice to say that they hadn't received the form and they would be taking backdated deductions on the next statement. The business manager telephoned and was told that there was nothing that could be done. They would have to take the backdated deduction. They couldn't stop the pay run, that it was going through, and they'd have to wait until the next month to be refunded. So obviously that can be a massive issue on already stretched cash flows for practices. So important to keep on top of any emails from PCSE and acting on them as quickly as possible. This practice had, but yeah, it is really important. Usually find that the practices do keep on top of them. Sometimes some of the GPs, I think there's probably several email addresses and maybe don't keep on top of all of the email addresses. So important that, you speak to your GP partners and business partners and ask them to make sure that any PCSE emails with case numbers on are forwarded or dealt with as swiftly as possible. We've had some examples of PCSE payment on account figures being incorrect. They've rejected forms unnecessarily and said that the payments on account figures aren't correct when they were. And to be quite honest, we have sometimes, if there've only been small amounts extra to pay for the GPs, or if the GP is going to be better off because of it, as long as their pension figures are correct, if the payment on account figures aren't, if it's in the GP's favour, we've just changed them and said, well, we've tried, we've told them, what else can we do? We need these submitting because the GPs need to know what their pensions are. Also, occasionally it's been small additional costs, but the GPs have said, I'm happy to pay the extra cost here because the amount of time and resubmissions that it's taking, and they're still not adjusting the figures. So Still quite a few problems around that. And those certificates are needed for being processed in a timely manner so that the GPs and any other partners in the practice can access their total reward statements and know where they stand with their pension pots and potentially annual allowance tax as well for the higher earners. Just another issue we've seen with PCSE duplicating year-end adjustments causing yet more cash flow issues. And I know that our colleague Danielle had got an example when I spoke to her where she was able to go back to PCSE with the dates where both of the adjustments had been taken and it was sorted out. I'd got another example where PCSE had replied and said that they wanted proof that they'd taken it twice, and giving them the date when they'd taken it wasn't enough. I do wonder if actually that was because the first time that they'd taken the adjustments had dated back, it related to a 2015 certificate, so it had been taken back in 2017. So I suspect perhaps they weren't able to easily access their data. Luckily, the practice had hard copies in the loft, and so they were scanned and sent across. So the final summary is it's important to know what should be going out and monitor that that is what is taken. Keep a log or ensure your accountant has a log of amounts owed and either check or ask your accountant to when any end of year or backdated adjustments are made. This will of course be checked as part of the normal year-end accounts procedure, but if they are larger figures, it's worth checking, you know, should these have been taken. Keep your case numbers and log those dates and issues raised so that you can be sure they have been followed through and closed correctly. And that's all from me. So let's have a look. I'll just have a look and see, come off sharing and have a look and see if there's any questions on my section. Are the rules around the rate used during paternity maternity leave different for salaried GPs to any other employee, i.e. non-clinical staff member rates are based on what they earn? Damon, you process, I believe it is the same for all of the employees, but I will get confirmation from Damon. Damon there?
Yeah, sorry, Kaz, just trying to find the microphone tab. That's a good question. I'm going to confirm it, but definitely the employees are based on the lower rate, so they're constantly assessed on the tier rate from the previous month. So from an employee side of view, that definitely is administered. Salary GPs, I'd rather just look into it, Katie, fair, and report back because just depends on the BMA contract and things like that. So.
Yes, the salary GPs of the standard contract are those lower amounts that I mentioned. The tier rate remains the same as the pay that they were on, but it's applied to the lower amount that's paid. That's the only question that's popped up. I am doing a webinar with Capstick solicitors on Tuesday the 25th of February at 1 o'clock, and that's going to be covering succession planning, partnership deeds, investment and funding. So hopefully people have seen the invite for that. If not, do just shout, we can send a link. So please do join us for that if that's something of interest to you. Just want to say a big thank you to Damon for covering the payroll side this morning, and a big thank you to Annette, who stepped in very last minute because Danielle is poorly. So thank you very much, Annette. And thank you to all of you for joining us. I hope that you found it interesting. There will be a feedback form being sent out to you at 11:30. It would be brilliant if you could just fill that in. It's really helpful for us to know what you'd like to see in the future, if this has been helpful for you, and also I believe there'll be space on there to put if there are any questions that you haven't raised in the Q&A section here or haven't sent in to any of us directly, then please do add anything and we'll get back to you. So thank you very much for joining us, and I hope that you enjoy the rest of your day.